Good morning, good morning. Hey, Nate, how are you doing? Sandy, ¿qué pasa, hermano? How are you? Raj, what's up? Oh my goodness. What's up, Lonigan? Hey, Michi, how are you? So, a little bit of drama yesterday, just when you thought it was safe to go into the kitchen. Mom and Dad were fighting, and this created a sell-off in not only Tesla stock, but also in the S&P. Hey, Only Flow, how you doing? But the good thing is markets are working quite nicely in the overnight. So you have that liquidation yesterday. We still have a little bit of a short position here where the low low of yesterday didn't get back into this cost basis. See, this is the position that was taken and sold up here. And so what happened was as soon as the drama hit the tape, and I can't believe I'm actually saying this. In 33 years, I have never seen such irresponsibility by a sitting leader and also by a corporate leader of a major S&P 500 company where they battle it out like little 3-year-olds on Twitter is just not only is it embarrassing but irresponsible because it wiped out billions in market capitalization. Um, Sorry for being a little preachy, but CEOs have a fiduciary responsibility to their shareholders to not act like that. And I guess that's the one good thing about Bitcoin. There's no CEO to go off making stupid statements. You know? Say what you will about Bitcoin, but at least there's no CEO, who goes off his meds and, you know, it just has it out with a sitting president. I don't know. Brutal behavior. Anyway, risk assets, and you could tell the other thing too is that this market, you know, the old market profile guys talk about the other time frame and stuff like that, and that's true, but most of this market is speculative now. And we have to, as retail traders, it's very important that you understand that now this market is a speculative market. It is very news sensitive. The ranges are very big. So never try and buy a dip when a market is selling off, right? Let it calm down. And that's what we have. The dealers last night, the dealers and the wholesalers, they had to take in inventory onto that sell off. And tonight, you can see the overnight low did not take out the previous day low. And we've taken that inventory and we're getting rid of it at night. Nighttime's a great time to get rid of inventory because there's not as much selling pressure in a market. So the wholesalers that were long, let's say underneath 59, 55, right, who had to buy inventory on the way down, They get to get rid of that inventory at higher prices, and that allows them to lose inventory or sell some of their inventory before the weekend. This is a critical part of how markets work, right? We have a margin increases because of NFP today, right? Thank you, Raj. So we have fewer traders in the market, but there's still decent volume in there. Got around 51,000 contracts so far. And the market overall, overnight inventory is long because at least 80% of the volume traded tonight is above yesterday's close, right? So we're looking for a correction to overnight inventory. We just had a correction in J period, and I will go into that. We've been kind of one time framing higher, and this is an inventory move, right? Don't take this that everything's fine. Take this that the market is doing what it's supposed to do and it's working normally, which is allowing those people who had to buy product on the downside, it's allowing them to get rid of that product and lighten up their inventory. So say if I was a dealer and I had to take in, I don't know, 20,000 contracts yesterday, I can maybe sell 5, 10,000 of those contracts, maybe 5 into this volume and turn that inventory into cash, right? Because why does a market exist, right? A market exists so smart money, size money can turn inventory into cash, buy it back cheaper, and then turn inventory into cash again, right? That's how you make money, right? That's how markets work, right? You bring stuff in and you sell it at a higher price, right? Yeah, of course, right? That's what their job is supposed to do, right, Raj? So if you were a dealer that never sold inventory, say you were a Jaguar dealer, right? And I went to buy a car. And I said, how much is that car? Oh, it's 50,000 pounds, right? Okay, I'll buy it. And you go, no, it's not for sale. You're not going to make a lot of money, right? Your job is to sell that car. Hey, Taco, what's going on? What are you doing up in the middle of the night? Good to see you. Oh, just getting off work? Oh my God. Working the night shift. So let's see if we get a correction to overnight inventory. Um, the nice thing to know also is where the bids were yesterday, and the bids were right where we thought they were going to be, right? Remember, we were looking at that cost basis, which is just around here, right? And you'll notice that the market came right into that cost basis and stopped. See? So everything's still working, right? Despite the little lovers quarrel that happened yesterday, right? Well, it's not so little really. It wiped a lot of value um, out of the market for for investment people. I'd hate to be long. Let's take a quick look at Tesla if you guys want to, right? Tesla 271.32 was the level I was watching, and yesterday we came into the 273s here, and before it found a bid, Tesla came right back into its cost basis. For those of you who are interested, this was the distribution, and then they just sold it right back down, right? Very speculative, and so if this thing gets into trouble, it'll break 261. Watch for that today. If you are long Tesla, or if you're looking to get long Tesla, maybe a look below and fail of 261.57, or if things get really bad, a look below and fail of 228, because that's the cost basis before the move higher to distribute. Okay? And back to the old ES. So we have some single prints in the overnight. We've got a short position underneath 59.63. J period corrected inventory, filled some of those single prints, stopped, turned around, and we just put in another overnight high, taking out these upper stops. So the other thing that you'll notice yesterday is that point of control did not move down from 59.70 down here. So we did have a liquidation, but we did not push enough contracts to move the cost basis lower. Good to know, right? Good to know. So let's go take a look at our levels. Yeah. Yesterday was pretty brutal. I mean, it says here the Tesla dispute, it took $152 billion off its market cap. The biggest one-day slide on record, which is, that's a lot of dough. Feel bad for the people who were long. It's brutal. These markets are trading very much like penny stocks. Moran, I agree with you. I definitely agree with you. Vinod, if you're listening, that's a beautiful balance zone. Well done. Nicely done. Hey, Doc, how you doing? Everyone's just finishing up the night shift. Cool. Good, good, good. Okay. All right. So I've got my levels drawn out here, and we'll just trade it accordingly. We've got VWAP down at, ah, sorry, stay with me here. Come on, VWAP. Dang it. We've got 52 to 56, double it to 65, double it again to 82. We've got VWAP here at 54. We're in distribution above VWAP. We've been in distribution above VWAP all night. So it makes sense that when we do get some liquidation, we will come back to VWAP, or at least try to. Right? We're looking for a correction to overnight inventory. Let's see what happens when London opens in 14 minutes. Had a nice look below and fail. here, 59.65 and a quarter. That was a nice trade, right? And so how we take that trade, somebody on Twitter was asking me, do I just provide guidance or do I actually show people how to trade? Well, this is the trade that we like because the market sells off underneath a level, comes back up over that level, cannot take out that level. So the execution process and the mechanics are to go long here, put your stop underneath the level. Your first target is the next level up. Second target is the next level up after that. That is what we call the look below and fail. The business reason for the trade is that the sell orders are complete underneath 65 quarter and they do not have to sell it underneath that level. So your premise for the trade is to go long, right? And your risk is here. So it's good risk because you're risking a couple of points to make 4 or 5, 6 points, right? Yeah, it'd be nice to see a correction back to 59.65, as the doc was just saying. Let's see if we can stay up here because the longer we can stay up here, we can maybe try and move that point of control from 54 up, get good distribution. How many contracts is the point of control? 1,034. Okay. You can see the selling's kind of slowing down as we get to 69.5. The offer's starting to lift. Oh, oh, some serious drama yesterday. I've never seen that in a market. I think before the next 4 years are over, we're going to see a lot of stuff we've never seen in markets. uh, and now we've slowed down to a crawl here. Yeah, it's a Forrest Gump market for sure. You never know what you're going to get. Oh. So we have NFP today, right? That's our big news event. Next week looks kind of light until Wednesday with CPI. Boy, this is really fun. Oh. The nice thing about the way we trade at and the trades we take is we really like that one setup. And you'll see that when that setup happens, like it happened here. So for example, if you had done that same trade here, you kind of knew that there was going to be a seller somewhere here. So you'd buy the same and then you'd put your sell orders out. And if your sell orders didn't get executed, you'd get out of the trade. That's how you really manage the trade. The next time it happens, you do the same thing. The biggest thing is, so you don't have to run your stops or move your stops around, when you're position long and you put sell orders in, that's how large traders that's how they monitor for continuation. So say you're long 66 and you've got sell orders at 68, 69, 70. Well, if your 69 and a half, 69 sell orders don't get executed, you know somebody's front running you and you go and you get out of the position. Because your job is to turn your inventory into cash. And if that doesn't happen, you have to get out of your inventory. Otherwise, that happens, right? Here we go. Get some liquidation. Let's see if we can liquidate down to 65, sorry. Right? We need to be offered under 59.5 to get down to 65. So right now, it's struggling. But as soon as we came down to 69, it bid up, right? The offer moved up. So when it's really slow like this, if you're a new trader and you want to learn, the best thing to do is to draw a level and then see if the market offers underneath it or above it, right? So a lot of people will see this and they'll go and they'll short it. They'll get sucked into this. If you wait for the next candle, right, and you see the market starting offering higher, that offer starts moving higher, then you know that they don't need to sell under 69.5. Once you know they don't need to sell under 69.5, there's no reason to short the market, right? Does that make sense? Do you guys understand that concept? So if you want to short, you want the market to offer under 69.5, then 69, then 68 3/4, 68.5, 68. You want that offer to move lower, right? That's why you guys get a trend line, right? But if the market offers really quickly under that 69.5 and then pops back up, think of it like a store, right? Say this is a glass door and the sellers are looking through the glass door and they open it just a little bit and a bunch of buyers rush in. Well, why would you lower price? You'd raise price, right? And that's what's going on, right? So it's just common sense. Trading is a lot about common sense, right? Nobody talks about it because it's not popular. So you can see that we have sellers at, see how we come into this area here? So if you were thinking of going long, we've got to get past that 71/4 because there's a wall of sellers at 71/4 right now. They're not letting it past. Why? Because they're competing with other sellers. See? Look. Bing. So now we want the market to offer over 71.25 and print the halves. Printing means trading at, right? I'll use the word print, right? See, right now it can't offer or print 71.5. When it's really slow like this, make your chart bigger, draw your line, and watch. So there's selling competition at 71.25, and they will lower price to capture the buying, right? See, what you guys don't never really understand because you're not exposed to it is the concept of capturing the buying, right? While it's slow, let me explain it. Oh, look, watch. Can we get a print at half? See? See, it's offered at half, but no takers. Offered half. There's the print. There we get a 71 half print. Now let's see if we can go, no, not yet, right? This is chop. But chop will really tell you that it offered very quickly and then they started to compete again because there was a limited amount of buyers at 71 half. So you lower your price to where you can get rid of the most inventory, right? Because you deal in size. Now, if we can hold price over quarter, maybe we can get a 71 and 3/4 offer and print, right? There we go. See how offer lifted to 3/4, but it came right back down? Just watch. I know it's really boring and it's really slow, but if you spend time observing the mechanics of trading, it will make your trading a lot less complicated because you'll understand the business reason for why you're taking a trade. Hey John, how you doing? Settling into retirement? It'll be nice to pop it up, Doc. They can sell more higher. There you go. See, you get a 71 and 3/4 print. See? Now it's offered at 71 and 3/4. There's the print, two prints, two candles. It's very tedious, but the devil is in the details, right? Devil's in the details. So even if you didn't go long here, right? You knew not to short it when it looked below and failed to 69 half, right? That's the most important thing. Once you understand that the market does not need to sell under a certain price, then there's no reason to short it yet, right? The thing about retail traders is they have smaller accounts, so you can't afford to be early and wrong and hold it. Let's see if we can print the 72s now. Not yet. There we go. Get a 72 print. London's opening now. Once it gets over 72 and a half, we'll look for 73 and that overnight high. Oh boy. Yeah, so when you're a size trader, you need to capture the buying. So if a client gives you an order to sell 100,000 shares of stock at say $8 a share, and he sees like 50,000 or 60,000 go across at $8, they'll call you and ask you, were we part of that? And if you say no, well, you're not going to be employed very long because your job was to find the size buyer and sell the stock to turn your client's stock into cash, right? That's why you must capture the buying, right? And that's why we sell into strength because there's always another trade, there's always another order, right? Yeah, there's that single print right over yesterday's POC, right? Right there, one little single print, right? Tiny little short position. Oh, it's slow. Yeah, I mean, it's a good distribution after all that drama where they had to take in inventory, you know? There we go, a little liquidation. We filled that single print. We ready to correct inventory lower yet? So right before where we had sellers, they stepped in again. Right? We're distributing right now, right? We're taking this inventory in the 54s, we're selling it up here at 71. When we run out of buyers, it will go on sale. And that's when you want to put in your short. You know, and as the doc said, wait a little while for London to sort out its order flow. Remember, always just wait for the terms and conditions of the trade to match the terms and conditions under which you do business. Don't see a short just yet. Exactly. Jeezy. Distribution means exactly what it means. Wholesalers and large traders that act as wholesalers are selling for a profit to buyers at higher prices, right? Because remember, it's a market, right? Everybody forgets it's a market. Purpose of a market is to take inventory and to sell it as high as you can for as long as you can, right? and sell tons of it. And when you run out of buyers, you put it on sale, right? Just like Walmart, just like Target, just like, you know, and then rinse and repeat. Algorithms and electronic trading just make that process more efficient. The business never changes, right? The business doesn't change. It just becomes more efficient over time, just like any other business, right? Automation makes any business more efficient. More transactions. Let's see now. Let's see if we can stay offered under 69.5 this time. I think it'll be a nice short down to 67, 66 into those 65s. Let's see. Right, there's going to be a little buying right here at 68 where that K low is. Yeah, there it is, right there. See, once again, look below and fail that 69.5. Yeah, price doesn't have to drop during distribution unless we have to put it on sale, right? So there was a little sale here, right? We dropped from 72 down to 69.5, right? Once we dropped under 69.5, that brought in buyers. So that way, when you look at these markets, you can see that. Let's see if those sellers at 72 are still there, because they were there here, here. Yep, they're there again. Right? So they're not done distributing yet, right? No, no, it's not, John. I'm just showing you once again, I'm just showing you that when the market dipped under 69, it attracted buying. So if you were looking for a short, right? It's not there just yet. That's why I like shorting from the edges. I love the trade when it does the look above and fail, right? Or the look below and fail of an edge of a zone. I took a little test short at 70 and 3/4, covering them at 70, 69. Now these aren't A plus setups. I'm just scalping. Nice, Michi. Nice. Right, and I wanted to cover before we got down to that K low again. Right. So what I was doing is identified that 72 seller. I hit it out here just underneath 71, and I knew that there was going to be some bids down here, so I covered it. And I'm just scalping on the micro just to see how good my reflexes are. Yeah, and there's that 68. That's where they stopped selling, right? So, John, what I'm trying to do is I'm trying to show you the mechanics of what's going on. I'm not telling you to take the trade. So when I say look below and fail, it is an actual look below and fail. Once you get good at taking the look below and fail from an edge, you'll be able to take trades at more subtle references, right? Because we have a number of different levels of skilled traders in this room. Like we have brand new traders like yourself, and then we have traders who are able to read the subtleties, because they're more advanced and they can scalp in and out of these things. So I'm explaining the mechanics to people, who are a little bit more sort of advanced. Now, if we can break that 68 bid, what does that mean, right? If the market, see, we always find bids here. If we take that out, everyone who's long above that will come tumbling down, right? And then we'd be looking for this area here because that's where the little position is before we went up to sell it. The scalps are exact. Those are mini rotations. Yeah. Yeah. As long as buyers keep showing up, you can continue distributing at that price. Now, as soon as those buyers start disappearing, you got to start lowering price, right? Because you want to sell your inventory before John does and before the doc does. And we're all competing, right? We all have inventory and we're all competing to get rid of that inventory. So if four wholesalers are at the same price and one of them drops their offer, right? You got to compete. Otherwise, you're stuck with a bunch of inventory you can't sell. And nobody wants that. So, little tip here now is when you see these little rotations, and the rotations, like this was a larger rotation, now the rotations are getting smaller. Don't trade that, right? Just like this. Don't trade that. That'll save you some money. Yeah, Michi, what software is that? Just curious. Well, it's indicative of business getting slow, right? Oh, that's what that is. Oh, okay. So when business gets slow, John, that's generally a sign for us to step away because then there's not as much follow through buying or selling. Oh. So remember, folks, it's Friday. Your main goal on Friday is to keep the money that you made this week, right? And a little quick plug for our room. If you're enjoying the stream and you want to keep it free, consider joining our trading syndicate where I teach and trade live all day. You get direct access to me and the other pros. We collaborate on trades and answer all your questions. There's a special discount in the description below. It's about 50 cents a day. It's cheaper than Starbucks and no indigestion. It's month to month, so you can cancel at any time. And we'll also help you get fully funded to trade with our friends at Apex Trade Funding. And that discount code is in the description. So please check it out. Yeah. Algos are cool at everything, but just always remember, folks, the most important thing that you want to do is only trade your setup, right? And that means that you're doing business on your terms, right? When the terms and conditions match your business, then you execute. That way you can manage your risk, right? When those terms and conditions don't match how you do business, there's no reason for you to do business, right? Pretty simple, right? This way you're not selling sunglasses in a rainstorm, right? Just simple common sense business, right? And that way you don't really have to worry about algos, you don't have to worry about, you know, there's so much you can talk about in markets, but what do you really need to know? You need to know where the bid is. You need to know where your risk is. You need to know the business reason for you taking the trade, right? If you're in any trading room talking to any mentor, right, and you ask them, hey, what's the business reason for going long here? What's the business reason for going short? And they can't tell you what the business reason is, right? If they don't know what the business reason is for taking a trade, if they just tell you it's random and you just have to take the trade or it's based on some algo formula or something like that, always remember proprietary algorithm equals Ponzi scheme. Okay? You should see if we have sellers at 71 and a quarter. Okay? Proprietary algorithm is a fancy way of saying Ponzi scheme. Okay? Never fails. Exactly. Uh, hey, DryFit, how you doing? Okay, so we're just gonna chop around here for a bit, see if we can get rid of that cheap inventory up here in the 70s. What time is it in New York? 3:20. As soon as people start waking up, we'll start to see a little bit more liquidation, I think. God only knows what the Twitter battle is going to be this morning. Hopefully they're twittered out and this market can just pick itself up and go back to doing business. And now it's just untradable chop right now. Hey Al, welcome. Welcome to the stream. Yeah, we're still distributing. Maybe we can move the point of control up, the overnight point of control, up into this 69.70 area. We printed what, 849 at 69? There's 700 at 69 half. All right, we still need 400 contracts to move. But pretty decent distribution, good recovery from yesterday's sell-off, right? The markets are working as they're meant to, which is good to see. So in about 35, 40 minutes, the electronic trading in New York will open up and we'll see where Tesla opens. Should be interesting. Does anyone have any questions? Should be an interesting market. Remember, folks, hold on to your wallets today. Don't let them take your money that you made this week. You know, that's the most important thing. Yeah, the sellers are always in control. You know, the funniest thing is when markets are going higher, people will say buyers are in control. And I'm like, what buyer wants to pay more? Just makes no sense. It's $50. Oh, I want to pay 100. Oh, okay, now I'm in control. Okay, I'll just keep selling it to you at 100. Beautiful. uh, Buyers are in control. Oh, it's funny. Right. And as a lifelong seller of product, inventory, stock, I just find that amusing. It is so, how shall I say? I don't know. Um, Not only inaccurate, but just it's just funny. The only time buyers are really in control is when there's a fire sale. Yeah, this is choppy, 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 folks. Does anybody have any questions? Anybody want to look at a stock? Anything like that? We've got some good stuff coming this month for people who trade longer time frames. I've got some work coming out on that, on how to trade stocks using these methods. Yeah, John, what's going on is the buyers are lined up here, right? The buyers are lined up right here. And as soon as the market sells down here, right? As soon as the market sells down, they see those buyers and they lift price. So the sellers are competing at 71, at 70, but they don't want to drive these buyers away. So they just stop selling when they come down to 69, 68. So if you're just learning right now, Spend time watching. And what I would do, L, is to develop your powers of focus. The reason why retail traders don't make money is they can't. There's two reasons. One is they can't focus on something for more than 30 seconds. And the other thing is they can't follow simple instructions. So what you should do, a simple thing to do, a simple exercise, is to take a chart, right? Take a chart and draw a level on it. Okay? So you take a chart and you draw a level, like here. And you watch to see what happens when the market gets up to that level. Can it offer above that level? Or does it get to that level and do this? Right? And that will tell you so much about the order flow or the customers coming in. Do you see we drew this 71 now? Do you see how the offer is offering above 71? That means buyers are coming in, and the size sellers, they can raise price now, right? Because if you have buyers coming in, then you draw another line at the top of these candles here and see whether the market can offer above these areas. Spend time concentrating on this. Try and look at one thing. Start 30 seconds, a minute. Can you focus and watch something and totally concentrate on it for a minute, 2 minutes, 3 minutes, without looking at 30 charts, without looking at your cell phone, without looking on Twitter, right? Focus and concentration. Work on those skills. Don't worry about making money. You're not going to make money when you first start, right? It's a skill, but the most important things in that skill are to focus and concentrate. Those are the basic fundamental blocks of being a good trader. And then start to learn the business. On my YouTube page, there's tons of videos where I explain how the business works. Our trading room at thetradingsyndicate.org, we're always talking about stuff like that. I post lessons. I do private coaching. I do one-on-one coaching. Just draw a straight line and see. Now that line's at 68.25. Does the market have to sell under 68.25? Right? Because when it comes to 68.25, does it move back up or does it have to sell under? Because if it has to sell under 68.25, the sellers are competing. But if they don't have to compete at 68.25, they'll raise price. Right? And remember, trading is simple. It's not easy, but markets are simple. Right? You take a bunch of cheap stuff and you sell it at a higher price. That's what a market is. Right? You take a bunch of cheap crap, you mark it up and sell it at a higher price. No, Phil, you have distribution, brother. Right? It's just distribution. You're getting competitive selling now. Right? Because we're offered under 68. Remember we were watching 68? And 69? So you want to see now if those sellers move down here. There's no competitive buying. Competitive buying usually happens at the low of a market or where there's single prints. You know what I mean? And that's it for me today. Thank you, everyone. And we will see you at 9 o'clock Eastern Time. Have a wonderful, wonderful morning. Take it easy. It is Friday, okay? Thanks, folks. Bye for now.